I think given Hong Kong's location and its history as a trade finance centre, distributed ledger technology sits very comfortably here, given the amount of trade flows, capital flows that pass through us as a trading centre. Also given geographically where we sit as well as a logistics hub. So thinking about what Hong Kong really is and how Hong Kong is positioned, not just for here, but also for things like Belt and Road, where we sit within the regions of major shipping ports. I think DLT, particularly for here and other markets such as Singapore, will be very relevant given the growth in trade and transaction flows between the two centres and of course around the region, which is more important. So as you look out to the future, obviously really the benefits that DLT will bring to the financial services industry, but also to the small and medium enterprise industry as well, can be quite immense, given how it can enable them to access additional forms of funding, different channels for funding. It helps with transparency, it helps prevent fraud. So I think there's a great deal of things that the DLT will do, and the application itself, of course, has a lot of capabilities. I don't see from a technology standpoint or from a functionality standpoint, it limits you. In fact, quite the opposite. It's an enabler to do new things and to add new services or provide different kinds of oversight around a transaction between a buyer and a seller, or a transaction between a buyer and a bank. So whether you're thinking about a one-to-one, one-to-many, or many-type scenario, many-to-many type scenario that involves multiple counterparties in a transaction, be banks, manufacturers, buyers, sellers, intermediaries, I think it enables you to do so much more. So I think where we are today, the limitations are on where we are now. The limitations aren't going to be on where we're going in the future. Words like trustless for me are quite unique words. Let's make the assumption that our financial services clients and their clients are of good standing. So there should be a high degree of trust already within the relationship between the buyer, the seller, and the intermediary. Of course, we also know that on the other side there are some less than scrupulous people who would, if the opportunity arises, for whatever means, for whatever reasons, use trade finance or letters of credit or payment tools, perhaps in a way that they weren't designed for. What this does is it puts a lot of security around that transaction. So as part of the distributed ledger, as part of that buying and that selling process, being able to identify your client via digital ID, having a smart contract, being able to reference credit or payment tools that are being used to finance the underlying trade itself will add even more integrity to the market. And of course, I think a higher degree of transparency as well, which helps everybody. It helps the regulators and the central bank from a monetary and capital management and oversight perspective. It helps our banking clients because our FSI clients are always striving to achieve the highest level of protection for KYC, for AML. And of course, for me as a buyer and you as a seller, I need to know I'm going to get paid, and you need to know I'm going to deliver. So I think it creates a lot of integrity, and it raises the levels of integrity in what is already a very, very practiced and very solid process. What it also does, of course, is takes out a lot of costs. So as technology builds, as infrastructure develops, as the DLT enables not only the financial service institution to offer more products and give access to those products to their SMEs or to their large-scale corporates, it also does it in a very, very secure manner. So allowing for encryption around the DLT, permission-based access to the blocks in the chain, and of course that creates a very secure environment that should provide you and me with lots of comfort.